Just making you're switching to a different channel.
I'm here live all the time.
For no reason, that's all I'm saying.
Okay, we're going live here. 10-4, what's up everybody out there on our YouTube channel? Welcome. Are we on Facebook as well?
Not yet.
We're not sure yet. Cool. We'll get, that is very loud over there.
What's happening to me?
Okay,
No sound for me.
this is yours in your ears. Is that you?
I don't know.
Welcome to the show, ladies and gents, on our YouTube channel. It's Jadu and Joan of the Banking Bros, walking and talking you through the save and spend system. We got a couple cups on the table here, and we got a new time and space. We're trying something out with you, and we'd love for you to give us feedback. Your feedback is questions, comments, and concerns about what we're talking about here in the chat, comments, DMs. We'd love to find you wherever you want to be found. But if you participate, we're going to answer your questions live. Jonah, tell them what's up.
Yeah, this is just a little chance for you guys to ask basically anything you'd like to about infinite banking, the infinite banking concept, about whole life insurance specifically that you have to use for the infinite banking concept. So this is your opportunity, your chance to throw those questions in the chat, and we'll talk and walk you through those questions as we get them. Generally, when we do this a little later in the afternoon, we get lots and lots of questions. So we thought that maybe we'd go live a little earlier in the day to reach a different crowd and see if you guys have questions. So what's up, TikTok world? This is an Ask Us Anything You'd Like to Know about infinite banking, and we'd love to hear from you. What I'll do to get us started, it actually is pull up some comments from some of the latest posts, and we'll see what folks are saying. I'm going to head to YouTube is where I'm going to head. I'm going to pull up some comments there.
So if you're seeing us on TikTok right now, it's 280 of you. What's up, ladies and gents? Double tap on the screen if you like, love, or learn anything here on our channel. What we teach here is how to become your own bank. We're going to teach you how to do that. We got the 3-cup setup on the table, and that's going to be visually stunning for you. It's going to help you understand what we're really talking about. And we got this little shot glass, little cup number 4 here, and some dollar bills, y'all. So welcome. Let us know where you are in the world. We're in Greenville, South Carolina, the northwest corner of the state. We got a little bit of a hurricane here compared to our friends in North Carolina. So those are different places, but thank you for the concern, all right? I appreciate those. Texas in the building, let's go. If you have never heard of this be your own bank, infinite bank type thing, put a 1 in the chat. First time here, never heard of it before. I'm interested in how I can save and spend money at the exact same time, but I never heard about it. That's a 1. Or put a dose in the chat if you've been here before. You think you've heard about it. You like the finance talk, finance bros talk, money talk, things like that. We got a bunch of 1s in here, but hey, you got to tell me where you are out there in the world.
Big shout out to Mimi on YouTube. Hey Mimi, thanks for saying what's up. I've got a first question. Let's jump into it. Okay, so this is from YouTube specifically. This is a user who didn't put in a username. It's user/PY7UB, so it's a bunch of stuff. I don't know who you are.
It's my favorite
If you
person.
tell us your name, we'll shout you out. But the question they said is, hey, when you take a loan, does the loan come from the institution that holds the insurance policy, or does it actually come from an outside institution?
Great question. Should I take it?
Do it.
Okay, so let's do the 3 cups really quick here so you understand what this question is about. Once again, when we take a loan against the life insurance policy, where does the loan come from? Okay, so let's put some money in first. That's called premium. Cup 1, right here. It buys us a life insurance policy. Peace of mind, paperwork, pool of cash, pool of funds, policy, something. Okay, lots of money. That's death benefit. Cup 2. When we show it to you in the United States of America, we are showing you cash value, the equity portion of your death benefit, okay? Must pay net today. Got it, everybody? Put it in the chat. Must pay, that's death benefit. This is whole life insurance. Must pay net today. All right, I'm sneaking out on you. All right, right here. This right here, this loan, in the way we show it to you, can come from inside or outside YouTube person. We're always talking about it coming from the insurance company, the general fund of the life insurance company. If you're in Canada, you might actually get it from a bank. So you can get a loan against your policy from a third-party institution. Yes, it is a thing, it is possible. That's not normally what we're saying though. We're saying you're borrowing against your own life insurance policy by getting cash value, from the insurance company's general fund. Okay, the same place where their death benefit is. Cash value is just going to come from them there. So it's a good question. It can get technical. It does not have to be technical, but we're talking about borrowing against your policy from the life insurance company. No credit check, as my brother always says.
Yep.
No outside influence, no Credit Karma, no Experian, none of that stuff. It's coming from
It's a big deal.
the insurance company.
When's the last time you were on one of the bank websites and you had to fill out all that information for a loan? Because boy, is it terrible. They literally, I mean, you have to open your file cabinet, open your Dropbox, your Google Drive, whatever you're using, to figure out where all these documents are.
Right.
It's ridiculous. Then they want to hit you with, well, we're going to need every bank statement from 2020.
Oh my gosh.
So
I've had to produce that several times.
Yes. So then now I'm logged into, oh my God, the bank doesn't want to download. Right? It's like, what month is it? It's weird on
my
the
phone
statement.
doesn't work inside your bank.
Yeah,
so like
what month is it on my statement? Let me just pull them all. It's ridiculous. Anyway, big shout out to Queen Me on YouTube. Thanks for joining in. Got a policy. Mimi says she's got a policy. I see Liz over there on YouTube's got a policy.
Liz is on both, I think.
Liz is on both. Liz is pulling a double
Now,
time.
hold on, Jonah. I don't know if you know who KKOK is. You do. You do, because you helped this person with their maps for years.
Okay.
But I'm the one who talks to them every week.
KKOK, what's your first name?
She's in San Francisco. I don't know what her first name is because I always forget.
KKOK, tell me your first name here on TikTok and I'll remember you. I'm pretty good at it.
Hey, appreciate you sharing the live. If you're finding value with what we're doing here, what we're walking and talking through, if you're new to this channel, this is Catherine. Catherine. He's not going to remember that, Catherine. What's your last name?
Catherine, sorry. Catherine's kind of...
Right. So, if you like what we're doing here, thank you for sharing, King Luigi. Okay, right here, right there. Click that and share the live. We just went live, so there's lots of information coming, and you can share it with a friend right now and let them know that the Banking Bros are live right here, right now, okay? She says, I was your favorite.
I believe that, Catherine. Good to see you again. I'm so sorry. If you told me if you can DM us your last name and I'll remember, and then I'll DM you back.
I know it's, I think
I'll DM you back. I'm over here looking for comments so we can answer some of these questions. I see Kathy on YouTube. What is up, Kathy? Good to see you. I got another one from YouTube. First, Gavin P says he really likes how you use money as the bookmark in one of your latest videos. So you can't say that money's not being put to work.
Okay.
So he liked that. But Carlos has a unrelated question to infant. No, we're not going to do that. It's super far out there.
All right.
It was something else. All right, I'm just scrolling
It was about
through.
Bitcoin, wasn't it?
It surely was.
How did I know? Y'all, ladies and gentlemen, we like to talk through the save and spend system. We're going to teach you how to save your money, spend someone else's. Go ahead and like and follow. Click right here. Follow us here at the Cash Compound. We're the Banking Bros, and we're going to help you walk and talk through building your own bank right here. So follow us. If you like, love, or learn something, double tap on the screen.
Okay, so Sheila M9141 on YouTube. She says that I need to tell the whole story in one of my videos. She says that Roth IRA contributions can be withdrawn at any time, penalty and tax-free, and you can take a loan against 401ks at a favorable interest rate that's paid back to your very own 401k, which I agree with both of those things, that you can do that. And then she said, I agree with you about the HSA, which I mentioned in the video. So it's not really a question.
So what probably needs to happen there is, number one, we have a YouTube channel, okay, guys? So go over there and see some of the long-form videos. And often what we're doing, and Jonah does it especially, is he compares what is called the infinite banking concept to some of the traditional qualified plans that most of us know and are exposed to and actually contributing dollars to. We like to talk about the guarantees, the growth, and the cash flow. And in this case, the favorableness of the tax treatment compared to the things you already do all the time. So sometimes it gets a little muddy, or if we're not paying attention, we might make it sound like everything is bad or this is taxable when we really were talking about another qualified plan. That's okay. The point that we're trying to get across to you is that every dollar that goes inside premium, cup one of your own banking system, will buy you a separate pool of the insurance company's money that they must pay out in whole life insurance. And we're going to leverage that for stuff we want to buy. Our dollars can be safe and sound and gonna compound while we have a separate pool of money to use, lose, or abuse.
There we go.
All right.
I got lots, actually, as I'm going through the comments on YouTube, I'm going to pick a new platform here in a second, because as I'm going through the comments on YouTube, we get lots of positive comments. Like, there's a lot. Great video, guys. This is a must-see. I'm sending this to my friends and family.
Okay, so Jonah,
Good
tell them
point.
where they can subscribe to us
Hi.
out there.
You know, stuff like that. So if you are on, so we're live on a few channels. So if you're watching us here, this is YouTube and our Facebook group, I believe. So you've already found us. You found us on Facebook, that platform. You found us on YouTube. That's awesome. If you're on YouTube but not on Facebook, you should be. If you're on Facebook but not on YouTube, you should be. If you're watching us here, this is TikTok. So a lot of people on TikTok can start watching without really following us. So for you guys who are here, ask questions because we want to answer them. I see a question coming in right here on TikTok. We can answer that one. I'm going to switch platforms because we got very cool to learn this concept. Yes, thank you for the reminder.
If you want haters, Jonah, we're going to TikTok. But
Great
if you want
content,
lovers,
super helpful.
Okay, so we've got lots of long form videos. If you can't get it all here on TikTok, go to our YouTube channel. It's named the same here, The Cash Compound. My name is Jadu. This is Jonah. We're the Banking Bros. And 10 years ago, someone taught us the truth about where you could save and spend money at the exact same time. That's what we do on this channel. So follow us. Can I get a couple follows right here? This is your ticket. If you go to our regular TikTok profile page and click the one link tree, one link to rule them all, you can get to our entire platform, our suite of information, our ecosystem of content. And we want you to watch our save and spend system video. Click that link behind door number 1 on the link tree, and you can watch the video for free. Throw your email address in. We've built you an hour-long presentation that'll help you get started with becoming your own bank. Got it?
All right, I switched platforms. I got good questions now. So this is from Rayleigh Kendrick. He says, hey, if I get a life policy and I pay my first premium, can I borrow against the total of the policy or just against the total of the premium paid so far?
I saw that on TikTok and I responded, neither. Great question, and neither. We got 3 cups on here, Rayleigh. When you put in premium, that goes in cup 1. It's a visual here to help you understand that this is the cost. This is the fee. We bought something from the insurance company. What do we buy? A policy. Okay, it's a bunch of their money. Look at this. My dollar bought their bajillions. I can turn my dollar into their bajillions. They have to pay. Everybody with me? We're not going to borrow our money. That'd be a withdrawal. We're not going to borrow their money. That's death benefit. We're going to borrow against the equity we have. That's cup 2. Cash value is actually how much equity you have in this total pool that they have to pay out. Cash value is the net now. Must pay, liquid today. Okay? So we're actually going to borrow against this. We can turn cash value, just a number in a ledger somewhere in a computer, we can turn it into cash in our pocket. Call the insurance company, borrow that against the total value, and your money still grows, and you still have death benefit.
All right, this is from Hi, I'm and Y, and they ask, how much, what?
We got to pause.
Why?
Because the movement says something for you.
Okay.
Correct, because there's no cash value for at least the first year, depending on the policy.
Hey, the movement, good question. Thank you for asking. You're thinking about traditionally sold whole life insurance, I would say. You're thinking about the policy that you know about from downtown or down your street or the guy that you bought it from or heard about. That's not true, the movement, in infinite banking style policies. In infinite banking style policies, there is cash value immediately. Immediate to me is right away. What is it to you?
Within 30 days.
Within 30 days, immediately. So you're not waiting a year if you've got an infinite banking policy. You will be waiting a year, possibly even longer. I've seen some people wait like 3 or 4 or 5 years if they go get traditional, regular, whole life.
Maybe you knew that.
So maybe you knew that. But with cash value, you're going to be able to, with infinite banking, you're going to be able to get cash value immediately, right away.
Okay, we'll go to yours.
Okay. Hi, I'm and Y. How much does it cost to start?
How much does it cost to have an infinite banking policy? Remember, we're going to build our own banking system by changing one thing, and that's just where the money went first. The money that you make, the money from your JOB, the money from your rental properties, the money from your vending machines. If you decide to put it somewhere other than Bank of America, TD, Ameritrade, whatever, you're going to buy more money. Okay, if you put it in whole life insurance, we're going to buy more money, and you get to pick the premium. That's the answer. You get to pick. Premium is level, though, in whole life insurance. So it's an ongoing premium, maybe every month, maybe every year, multiplied by 12, every year. You can pay annually, and that is an amount you pick. So it's not me that decides or tells you how much it costs. You give them the money. How much does it cost to have a bank account?
Generally, it doesn't cost anything, but they're going to make you deposit a few dollars to start it.
The person who just asked that question,
Yep.
How much does it cost to have a bank account? It's actually the same question.
Yeah.
It's, whatever you put in last year is how much it cost.
Yeah.
Like if you put in $100,000 in your bank account, that's what it cost, I guess. So you got to think of it, you got to switch your mind a little bit. So hopefully that's helpful for you. If that was helpful to you guys, double tap on the screen for us. Jonah, give us something.
We got great I need to come in the comments more and read them because we got good ones. This is from Yes Misi on TikTok. Thank you for sharing. Good to know. Shahan says this is by far the best explanation of infinite banking I've ever seen. Shiki says another great video, y'all. Really appreciate what you're doing. So I'm awesome. I got awesomes. I got thumbs ups. Here we go. Mr. Spencer. Okay, so I got to give a little background for this.
You know Mr. Spencer?
No, but it's a comment. Okay, so I got to give a little background for this. There's a very popular guy out there in the finance space who says buy term and invest the difference.
There's a bunch of them,
right?
Actually.
But there's a really popular one. That's who I'm talking about.
Gotcha.
Okay, so I recently made a video where I said buy term and invest the difference is basically saying buy the cheapest option you can possibly get, and whatever you'd save off the alternative, that's what you should invest.
Okay, right.
So I
Buy
said
the cheapest and risk or invest the rest.
Yeah. So I said, why do the people who like buy term and invest the difference, why do they apply that to buy term and invest the difference, but they don't apply that to the regular life? Like rent your house, invest the difference. Only take Ubers, invest the difference. Only, right? Does this make sense?
I'm with you.
Okay, so this particular comment, Mr. Spencer, he says, buying a house does not cost more than renting. And you don't have to keep paying on the house forever.
So it depends on what we're actually comparing, right?
Right.
Because if you rent forever and live to 150, sure, you'll pay more in rent.
We got to do the same time period. That's important, right?
You have to put them in the same
You got to put them in the same, right, exactly.
Right. Okay, so here's what we're saying, ladies and gents, and then Mr. Spencer, maybe this can be kind of helpful for you here, is what we're saying here is that you build equity value inside life insurance that's liquid. Equity value that can be leveraged and that is liquid on a property, a life insurance policy, your body, that never goes away, that always goes up and can be used for money. We're not actually comparing it to an investment. We didn't say invest anything.
Yep.
Now, if you would like to invest these dollars, you can. But if my birthday's in February, you can give them to me. Jonah, when's your birthday?
June. You can give them to me too. I'll take them.
Whatever you want to do, right? Most people have a hard time early on deciding they're going to hear what we're saying if they're already stuck in their ways. Because we're not comparing this to an investment at all. We're saying that if you put your dollars, store them like a bank, all you do is store it down there at Citi. All you do is store it at Chase. It buys you a separate pool of big dollars that you can leverage. And now you have someone else's money to pay taxes with, to get out of debt with, to send your kids to summer camp. Okay? And if you compare that idea to investment, we are not even talking about the same thing.
Right.
So it's
Super
not,
different.
investment is not bad. That's not what we're saying. We're just not saying that with this information. Now you need to go, Jonah, can you give us a little clue maybe of where we can find that investment term and investment video at all?
Yeah.
Or what the name of it is? Because
Yeah,
it's really good.
It's on
People
YouTube.
should watch that.
It's on YouTube, on
Okay.
our channel.
Click here and
And
you'll go to the YouTube.
Right, there'll be a link there. And then what you should do is you should search for the video. I'll have to catch the name really quick. So give me just a second.
Yeah, we'll
and
give you a
I'll be able to
second.
get
I'll
to the
look at
name.
this and help everybody. Ladies and gentlemen, my name is Jadu. This is Jonah. We are the Banking Bros. And here on the Cash Compound channel or on YouTube, we're helping you with code cracking cash flow. Code cracking cash flow. How many of you just heard me say the word investment? You didn't. Code cracking cash flow. We're going to help you save and spend money at the exact same time. We walk people through that in a video we'd love for you to watch. Click right here. We built it for you absolutely free. And what we want you to do is go to our link tree. Okay, one link to rule them all. Go there, click it, and when you do, you'll see the video pop up. Put your email in. We'd love to walk you through that.
That video is called Buy Term and Invest the Difference. I thought that might be the name, but I just didn't remember.
We got Will out here producing like crazy, and sometimes I don't remember all the titles either. I don't think I remember any titles.
The titles
I
are
don't
tough
look
to
at them.
remember, though.
Yeah, I don't look at them.
If you make content, I can remember the content. I remember I talked about it, said this, but I don't know the title.
Okay,
Right.
we got a couple things for you here.
Okay, ready?
The movement says, he's responding to somebody.
okay,
but
good.
let's, the movement says,
Yep.
yeah, infinite banking is basically an IUL with a different name. Or am I wrong?
The movement, you're super wrong. Super duper wrong. Incorrect. So who did you respond to? Tell that person he's not correct either.
Okay, they can
Who
hear
is
this.
it? Okay, anyway.
Skeet powwow.
The movement. So I understand why you said it, but let me explain. Infinite banking is a process of using whole life insurance for financing needs, for cash flow, like we're talking about. That's really important. IUL stands for something. It stands for Index Universal Life Insurance. There's no process to IUL. It's just go buy one of those. And IUL, Index Universal Life Insurance, is not the same, does not work like, not even close to whole life insurance.
It has some similarities.
They're barely.
It has some
It has more differences than it has similarities.
It has more differences.
It has way more differences. It's almost like saying that your Ferrari is the same as the Ford. Sure, there's some similarities.
They're both cars.
They got their cars. They both
Yes.
got four wheels. That's about it. Like they're very different. You know what I mean? Again, transportation. We get it. It's just it's a poor parallel. But what I'm saying is, no. Infinite banking has absolutely nothing to do with Index Universal Life Insurance. Index Universal Life Insurance policies are, in my opinion, we can talk about it if you want. Ask another question. But in my opinion, they're down here. Whole life is way up here. They're very different. And if you understand the differences, most people choose whole life once they know the differences.
Let's go. Ladies and gentlemen, if you need more resource information, we don't sell books, but you can buy them, that's for sure. They got a bookstore in your town called Amazon. Okay, becoming your own banker is going to help you understand that whole life insurance is the product that we're going to use for the process of banking. Banking. Everybody's going to hear miss it. I'll say it 3 more times real quick. Banking. Leveraging. Okay, so in infinite banking policy, we got another question there from somebody.
Okay, ready?
The movement says, so is this whole life? And
Yes. Yes, the movement, whole life.
Lee Reynolds says equity is liquid cash value.
That is correct. Lee Reynolds, thank you.
And BH says, I want to know what is equity. So
Oh,
all of that put together, just
I love it.
everybody's typing fast.
cool. Yep. I've got one too when we come back to the other platform. Okay, let's talk about equity. Let's talk about your house if you own a home. If you don't own a home, that's okay. Let's still talk about it. This is what a lot of people relate to equity. It'll be really easy to understand. So when you buy a house, generally speaking, there are a couple different ways to do it, but generally speaking, you're going to put this much money down. They call it a down payment. You, however, have purchased the whole house. You get the whole thing, right? So let's relate it to our cups here. You pay this much in premium, but you get the whole house.
You can move in
The
today.
whole thing.
They give you the keys.
Right? They give you the whole thing. Okay, but now every month you've got a mortgage payment. So every time that you pay the mortgage in your home, more of the house is already paid for. It's already paid for. You've now paid it off, you bought it. That part that's paid for becomes equity in your house right now if you've got one. or whoever has a house on the platforms, give us a thumbs up. That's exactly how it works, right? Okay, now here's where it gets tricky. If you want to go get the equity out of your house, you got to go fill out every piece of paperwork you've ever seen ever with the bank. That's how they make you apply for things, go take the money out of your house. With life insurance policies, it's the same deal. Every time you pay that premium, more of the payout is bought, paid for, paid off, becomes equity. But here's the cool part, you don't have to go through any paperwork to go get the equity out of your life insurance policy. All you got to do is log into their website and click a few buttons. So it's very, very, very similar to owning a home. That's why we relate it to that all the time. But equity is just the liquid portion of a huge sum that is already paid for, paid off, or bought. It's yours.
Love it. Okay, Legacy Life and Retirement. That is a great channel to follow. Ladies and gents, jump in there and do so. Get on that game. And his name is Sean, if he comments on anything here, he's one of the specialists around what we're talking about that can help you answer that stuff.
That's right.
So is Liz DeRock, okay, Liz DeRock, or Kathy L. Kathy L. Those three people are some of our team members who are our coaches. Now, Jonah, tell people how they can talk to one of our coaches one-on-one.
Yeah, so again, you got to click the link in the bio. Again, like Jeremiah said, it's one link. It's just one link. On YouTube, on Facebook, it's one link. And once you do, you'll be able to actually book a free call. When I say free, I do mean free. We're looking for your actual phone number so we can actually call you, and then it'll pop up on our calendars and we'll give you a call, and we will answer your specific questions, or we'll talk to you personally, or we'll show you different examples, or we'll look at your policy, my policy, that old policy grandma bought you. We'll look at it together. We'll read it to you. We do that every single day for lots and lots and lots of people. It's always funny to me when people are like, oh, it's exactly like you said. And I was like, yeah. It's exactly. I just came back from Los Angeles, did a little presentation there,
Dodgers.
and I had just won the World Series last night. Go Dodgers! But I had a lady that I was chatting with, and she was like, "I know you said that you would talk to me and show me things and whatever. I'm assuming it'll be a little different." And then 30 minutes later, she was like, "Oh, it was literally exactly what you said." And I was like, "I told you it was exactly what I said." It was kind of funny. So anyway, all right, what do we got?
Okay, Love says, LOVE, have you run the internal rate of return with your illustrations? No, because we're talking about banking. You can, it's fine. We're not scared of it. But when we're talking about infinite banking, a bank has a lot of startup costs. They got to dig a hole in the ground. They got to buy the property next to CVS and the Waffle House. They got to staff it. They got to put computers in there. They got to put up billboards. And they immediately take in people's direct deposits and loan them out. That's what we were here to talk about. There will be an internal rate of return inside your policy. Of course, totally fine. That is going to be liquid. You can turn it into cash in your pocket. It's cash value, cup 2 right here in the middle. It's going to be income tax free, but we're talking about banking. Banking is using these dollars to go make money. OPM. Put OPM in the chat if you know what I'm talking about. What is OPM? The insurance company we're utilizing for this process gives us OPM to use, lose, or abuse. Put it in the chat if you know what OPM is. Let me know if you are listening. We have their money, and we're going to use it. That is not about an internal rate of return, even though we do get that. So it's cool because you get both of them.
Yep.
Okay.
Somebody on TikTok said we should call us the life insurance bros instead of the banking bros.
That is the dumbest thing.
Dumb. Yeah.
We love you out there, but why would we? Well, the banking bros, look at us right now.
Yeah.
Why would we change?
That's what they said.
Okay, come on, guys.
That's what they said.
Double tap on the screen if you like, love, or learn something. If you're following what we're dropping here and you're getting game, put game in the chat and double tap on the screen. Put game in the chat, double tap on the screen.
Ryan on TikTok says we're actually forbidden by the U.S. government.
I already know. Stop. From calling it investment, I get the same comments all the time. I already know. I know. Y'all can't even give me new comments. Okay, life insurance is not an investment, and we're not forbidden from calling it investment because it's a bad thing. It's not an investment, it's insurance. When's the last time Ryan called his car insurance an investment?
Yeah, he doesn't. right? But all of a sudden, when you want to talk about life insurance, it's an investment.
And it's because there's liquid equity that gives you IRR and it goes up in income tax free. Oh, so now it has to be. No, it's still insurance. Insurance is the antithesis word of investment. Investment implies risk. How likely are you to lose money? Insurance is literally how not to lose money. That we could rename it. Insurance, definition, Webster's, how not to lose money. It's not an investment.
Right. It's how to make sure that you actually get all the money back you once had. Insurance.
Hold on. You
crazy?
You have car insurance, yes?
I do.
From who?
I have car insurance from USAA.
Investment.
No. I also
You're legally forbidden. That's why you'd be doing this.
I also have 2 car insurance claims active right now.
I got one.
Active right now. So the worst.
So we had a hurricane, ladies and gentlemen. Shout out to where you are in the world. Put it in the chat. We're in Greenville, South Carolina, but we're helping people all over the country. If you're down here with Uncle Joe, we got you. If you're upstairs with Justin Trudeau, we'll send you to some friends. All across North America, US and Canada, you can do the process of becoming your own bank. In this hour, we're answering questions for people right now in the chat, on our other platforms, on YouTube, about their conspiracies, their questions, their concerns, or their misunderstandings about doing this. Florida in the building, Jonah. Got Florida.
What's up, Florida? Are you in the part of Florida that got hit by a hurricane also? And if you are you okay? How's your stuff?
Let us know.
All our stuff is still on the side of the streets, actually.
Oh, the movement. Hold on, the movement.
All right,
We're back. Back again.
All right.
What are the fees to borrow your own capital money?
Oh no, the movement. It's not your money, man. We're okay, so let's think about regular old insurance for a second. Regular old insurance. If you buy car insurance, you pay a premium. I have USAA. Who do you got?
USA.
Oh, same company. Okay. My car insurance is $218 a month, I think. 2 cars. $218. What you got?
Less.
Okay. $218. So I'm going to give them $218 every single month. That is my car insurance bill. And the agreement with the insurance policy is that if I crash the car or if someone hits me, they will pay the damages. In fact, they will pay the full price of my $50,000 car. I only gave them $200. They're going to insure my car for $50,000 because that's what the car's worth. $50,000 is not my money, man. $218 was. I gave it to the insurance company and they said, then we got $50,000 for you if something happens. Now in whole life insurance is the same thing, man. I'm going to pay a premium. This is my money. I paid it. It comes out of my pocket, my bank account, my check, whatever. I paid it and the insurance company says, okay, Jonah, if you pass away, I've got a bunch of money for you. Could be $50,000, could be $100,000, could be $1 million. That's how it works. Life insurance, that's how it works. And then every time that you make the payment, more of the $1 million, let's call it, is paid for, and becomes cash value. And that's what you can borrow. You can go take it, you can go use it, you can go buy stuff, you can go pay stuff off. It is not your money. If it was your money, it would not be called borrow, it would not be called a loan, it would be called a withdrawal if it's your money. You knew that. But all of a sudden, when we talk about life insurance, everybody throws that out the window. If you go to the bank right now and you go to the ATM, that is a withdrawal. That is your money. If you go to the bank right now and you walk inside the bank and you talk to a teller, you get a loan, you get a credit card, that's not your money, man. It came from the bank, I'm with you, but it's not yours. Your bank balance didn't drop. It's not your money. So I went kind of hard on the own money.
Okay.
Well, you capitalized it.
Okay.
So I needed you to know that that's not correct.
We'll go good cop, bad cop, because I'll do it on the next question. I'll get fired up. So when you borrow against your policy, their money that's on standby for your family, friends, church, and charities, we are going to take it as a loan. There is going to be interest. Okay, that's the other half of your question. There will be interest.
Yep.
Okay, so if you borrow, how much we got here? We got $61,000. We borrowed against our policy. We got $61,000. They will assess interest to the policy and the pool of money they owe you still. Remember he was telling you, this is the money they owe you. It's their money. The reason I gave them my money so I could get way more of their money. They will assess the interest to that. And there it is, okay? So you borrow the death benefit. We borrow the equity of the death benefit, cash value. Do you see I have 2 cups in my hand? The movement. Are you listening to any words that come out of our mouth? You see our hands? Okay, premium buys death benefit. Cash value Here, let me do it differently because it's helpful for some people. Totally fine. Cash value is how much of the death benefit is liquid so far. I'll put it in a different cup so you can see it on TikTok. But cash value is how much money they owe your family. No fish fries, no GoFundMe's. They owe your money this, it has to pay out. This is how much you could borrow if you're not dead.
Yep.
If you are dead, they give your family this. We're going to put it in a separate cup for you. Great questions. Let's make sure that you're getting it. Give us a thumbs up. Anybody out there, give us a thumbs up if that makes sense.
You got to scroll a little bit. Somebody said they don't know.
Oh, don't worry. There's lots of, they don't.
No,
it's okay.
Ask the question.
Okay.
I do know.
All right.
What about this one?
Oh, he's talking about we don't know. And of course, hey, sometimes they try to hide your comments. We're not scared of them. So, okay, don't worry. Hey, Nicholas Valdez says they don't know. So
yeah, Nicholas, I don't know what. I don't know what.
Okay, Brandon says, how many years do you have to wait to pull money? If we're building the policy on purpose for banking, you don't. Brandon.
0 years, Brandon.
0. Okay, we're going to engineer a policy on purpose that where you pay, I pay. Oh, somebody says, show us your in-force illustration. I think that's movement. I have 9 of them. I have lots of them.
Yeah.
We show them lots of times on YouTube.
Yes, also the movement. If you would like to see my in-force illustration, I'd be more than happy to show you. Click the link in the bio, schedule a call. When we're on the call, I'll show you. On TikTok, we're on a cell phone right now. I cannot share my screen with you to show you. Apologies, but if you want to see it, book a call. I'll show it to you.
Nicholas says, Wetzel, they're lying. It takes years to build money in these policies. Actually, it doesn't.
It doesn't,
you can see that in this book. You can see it in our... We have a save and spend video. We want you to watch that video. We're going to shout out to anybody who clicks on the link.
Hold on a second.
Who wants to...
Here, who is that? Who said they're lying? What's his name? The at?
Nicholas Valdez.
Okay, Nicholas Valdez, watch this. Hey, everybody who is familiar with infinite banking in our comments right now, who has policies, who was able to pull money out of their policies within a year, because that was the other question. So right away, immediately, would you guys give us a comment, please?
Put a thumbs up.
Put a thumbs up. I did it. Yes, me, that sort of thing. I appreciate you guys.
Okay, Catherine.
Well, Catherine says first month.
The first month.
So she must be lying too.
She's in San Francisco.
Must be lying too.
Okay,
Took my money out
Liz
5 days.
Liz
Legacy.
Is in, Washington State.
Yeah.
Okay. Legacy Life and Retirement. He's in Florida. Took money out after 5 days.
Must be lying too.
What's up, Lee Reynolds? You got a call with Jesse today. Lee Reynolds is in underwriting.
Awesome. What's up, Lee? I'm glad you're joining us here, man. Can't wait to work with you.
Christopher says, whoops, almost blocked you, Christopher. Don't worry, you back.
If the carrier sees you showing your own policy, they will terminate you. No, that's not true either, Christopher.
That is not.
Happy to show you, man. Jump on the call. I'm happy to show you. You can record it if you want. You can send it into the carrier. They're just going to call me and say, Christopher's being weird.
they do that.
Yep.
Okay, so... don't worry, Chris. And remember, Chris, if you don't want to call us, you can still just go to YouTube and look up lots of different illustrations.
Yep.
Love, Love says, replacing one of Brent's at the moment. Thanks for the business. My name is Jeremiah. What's your name?
Jonah.
Okay. You'll have to talk to Brent about that.
All right. I got a question for you here from YouTube. Scott. Scott says, hey, Jay. Curious, did you intentionally stop the premiums after 10 years on purpose? And is there a benefit just to continue paying for 10 plus years?
Okay, I guess I'm Jay.
I think it was
it's
one
of
us.
us, right.
But,
okay, say it again though for me.
We obviously showed an example, like we show on most of our YouTube videos, of real policies, where this policy, the person paid for it for like a decade, then they quit paying for it.
Okay,
so... And they're wondering, should I do that, or should I keep going?
So it's up to you, first off. It's up to you. And we're going to walk and talk you through this on a free cash consultation to make sure it's the right choice for you. But remember, every dollar you put inside premium has guarantees on it. There are 4 guarantees. Guaranteed not to go down. There is no investment. It's insurance. Guaranteed not to go down. Guaranteed to buy you a whole bunch of money. Guaranteed to be increasingly liquid in cash value and guaranteed not to cost more. Okay, so that means that every year when you put in the same premium, did you hear the guarantees? When you put in the same premium, there's more of this money over here. It just keeps going and going and going and going. Who's old enough to know that one? Put it in the chat. What am I talking about? All right, you remember that marketing campaign? Every dollar you put in here compounds with the last time you put money in, and last year, and all that. And you'll have more death benefit and more cash value that you could use, lose, or abuse. So you might not want to stop at 10 years.
Yeah.
Because every time you put in dollars, there's more over here. And they're compounding. So you put in the same, let's say your premium is 50 grand per year. You put in 50 grand every year. Next year when you put in 50 grand, 100 is compounding. Next year when you put in 50 grand, 150 is compounding. You see how that works? You might not want to stop after 10 years. I probably would not. Okay, what's it growing at? It buys death benefit, the movement. The movement's not going to get off of this, and that's okay. The movement, did you click? If you say yes, if I see your name here, I'm going to keep answering your questions. If not, I might have to move on to someone else. So the movement, click that link behind door number 1, and I'll see that you are going to watch the video. Okay, the movement. But you're going to buy life insurance. Cash value is how much life insurance you have equity in so far. Okay? So you bought something. This is change. Do you understand how it works at the grocery store? Jonah, you go into the grocery store and you pay for things.
Yes, I do.
Okay? What do you buy at the grocery store?
Fruit, vegetables, milk, actually. I got a baby. We eat so much milk.
Really? You guys buy milk?
I mean, we buy it from a grocery store called The Willow, and it's raw milk, and we buy so much of it.
Okay.
And it's expensive. It's more
Now-
expensive than regular milk.
All right, very good. Now, in this analogy, the grocery store is different than life insurance. If you overpay for what you need to buy, what do they hand you back at the register?
Change. The
Change.
register pops open. Ta-ting!
Okay, very good. That might help you understand a little bit in the scenario. We're trying to help you understand. Okay, ladies and gentlemen, if you are liking, loving, or learning something on our TikTok channel here today, or if you have comments on YouTube, throw them in, but double tap on the screen. Show me some love. Can I get some hearts out there? Some heart. It fills me with joy if you're learning something. That's what we got 2 right then. We got 2 more. Okay, and if you want to share this information with somebody, go ahead and click right about there. A couple more shares to let other people know that there is a way that they, the movement included, can keep their dollars and spend someone else's.
Yep.
Okay? Gerber, you have one?
No, I was checking Facebook to make sure we weren't neglecting those folks.
Okay.
I've got, I went to TikTok, I went to YouTube. Let me go to Instagram for a while.
Okay,
And
now
we'll get
remember,
some,
we have a
comments.
Facebook group where you can keep answering the questions and stay in the conversation. Okay, it's called Infinite Bankers. Infinite Bankers. We got a couple questions for you, but you can join our community if you like. You don't have to buy anything. Ask all the questions that you want. Okay, I'm going back up to answer some thoughts or questions. Okay, the movement. I tried to share, but he was blocked. I apologize for whatever you're talking about. I don't know. Gerb.
If you're blocked, I'm sorry, man. We didn't try to block you. You can see me. I'm over here trying to check comments.
Okay, Gerb says, so are the ones with good cash value mutual or whole life? You didn't. That is an improper question. Okay, mutual is going to be a style of company that pays dividends every year. Dividends are profits that get shared with the policy owners. Whole life is something you can buy from a mutual company. Gerbs, give me a 1 if you just understood that. Put 1 in the chat, re-ask your question to make sure I answer it well. Mutual is a style of company, not a stock company. And a mutual company, when they have dividends annually, will pay the dividends to the whole life policy owners. That's something you can buy from a mutual insurance company. You can buy term life insurance from a mutual insurance company. You can buy Butterfingers and Reese's from their lobby. You can buy whole life from them. Mutual is a style of company and how they share the dividends. Let us know if that makes sense. Brandon, what's the penalty for taking your narrowed money without paying it back?
Narrowed.
You probably meant borrowed. It's
borrowed.
I was like,
borrowed.
narrowed.
Okay.
What?
Sorry. I was
Okay.
like, narrowed. That's crazy.
Okay.
Penalty for taking your borrowed money without paying it back. You're going to love this. This is specifically for you, Brandon. No penalty in sight, right?
Play on, no penalty.
No penalty. VAR check. No penalty. Keep going, man. No penalty at all.
So remember, if they owe you,
Yep.
oh, you want to
No,
finish it?
yeah, go
Okay,
ahead.
they owe you. The insurance company, Brandon, owes your family, friends, church, and charities $1 million. You decide to take some of the equity that's liquefied, cash value, and use it. You're going to go $50,000, trip around the world, hot air balloon. You run out of gas, you hit the ground. Your family gets the rest. right? They owed your family all of the money. You borrowed some of it, use it early.
It's whole life
went for a great
insurance.
trip. Okay, your family gets the rest. No penalty. Okay, this is liquid equity. You can call the insurance company or log in, have them send it to your bank account if you trust the postman. Do you trust the mailman?
I get lots of letters. Normally they're not lost. I do trust the postman.
Okay.
I'm not going to send checks intentionally through the mail service. I'm going to get direct deposits, but I do trust the mailman.
Okay, so let us know if you trust the mailman. Put 1 if you trust the postman. Hey, wait a minute, Mr. Postman. If you do not, then put a 2. Direct deposit. If you want direct deposit, put a 2. If you want to trust the postman, put 1. Okay, we answering your questions? Let us know.
Just want to make sure that we're going to keep doing this weekly. We think this time might be a new norm for us, YouTube world, Facebook world. So if you're going to go back and watch the replay, or if you're going to just scroll through and kind of scrub through the video, you at least should know that Thursdays at 12 noon Eastern, we're going to be answering questions. We'll pull up all the socials we can possibly pull up, and we'll just start answering them. So if you're leaving comments on our stuff, and you're thinking, oh, they're not paying attention to me, they're not going to see it. Wrong. We're trying to find it.
Wrong.
We're going to find it. We're going to answer your question.
Remember, you can follow us right here on the TikTok channel at The Cash Compound. We're the Banking Bros. We help people save and spend money at the exact same time. We're teaching code cracking cash flow. You learn where to put your money in the first place. It's always guaranteed to be there. No matter what you think about it, life insurance has been around for 200 years and it doesn't change much. So paying your premiums will buy their money. Okay? Cash value just happens to be what is liquid today. There'll be more tomorrow. Follow us on this channel, The Cash Compound, for more tips and tricks to never losing your dollars.
Yep.
Okay, Ernesto says, no term life insurance, correct? No, you can buy term if you want. Just remember that term has no equity. Term is a rental, okay? We're coming to YouTube here in a second. Term is a rental. If you pay premium to an insurance company for term life insurance, you now have a lease. You have a rental period. Term, maybe up to 30 years.
10 years, 20 years, 30 years.
And they'll pay death benefit if you die during the term. If you don't die, they won't.
There's just no equity inside of term life. So term life is specific for this big chunk of change, and you got to pick the right term. You don't want to mess that up.
You got to try to die early.
Yeah, I talked to somebody recently who had term that was renewing in 4 years. Premiums went from $62 a month to $1,800 a month. And so they called me and they were like, well, obviously I'm not doing that, so what should I do?
Die.
And I was like,
immediately.
That's not good for term. I mean, that's how it's set up.
Yeah, so term is fine. Ernesto, what we do on this channel is we help people understand that if they utilize permanent insurance, a specific type called whole life. I know you guys think whole is spelled with 3 letters. It's not. Whole is W-H-O-L-E. W-H-O-O-M-P as a flow. Womp, there it is. IUL is 3 letters. That's a different word. Whole life, W-H-O-L-E. There is going to be equity value, and that's what we're going to use, lose, or abuse to pay our bills.
Took me a second. Okay, we got to come to YouTube. Crypto Ape. Good question, man. You're asking, or lady, sorry. Crypto Ape. I don't know.
I don't know many ladies that are going to try that one.
Crypto Ape. Yeah, I'm gonna go with a
16-year-old.
No.
You don't think?
No, 25, 30, Crypto Ape. Yeah. Doing crypto? Over 18.
All right.
No way. Anyway, the question is, can you deposit your paychecks? It's a good question.
It is a good question. The answer is no. You don't want to. Your boss isn't going to. So even though we say pay yourself first, PYF, pay yourself first, we use that term every once in a while. Where your money goes first, let it go to your regular checking account first, and then pay your premiums quickly after that.
Yeah.
Okay, so no, your boss isn't going to direct deposit into your life insurance policy. So I know it sounds like that. That one we'll give you because we make it sound like it's like direct depositing.
Yeah.
Don't do that.
That's the thing about direct deposit straight into your bank account, income tax, things like that. That stuff is new. This stuff showed up in the 70s and 80s, and they started doing that to make sure they knew how much money you were making so you could pay taxes. That's why they started doing it. It did not, I mean, everyone who's watching, you guys do realize like income tax coming directly out of your check was not a thing until, do you remember?
1933.
No, coming out of the check though.
1933.
Was it? Before 30, so 1913 or 12 to 1933, you reported it and just paid it. 33, they started taking it out of your check because people obviously weren't reporting it and paying it. Right? Who would? I mean, people don't do it now. The people who work in cash businesses. That's the one reason. That's the one reason they work in cash businesses.
The barber,
I'm not reporting that.
the person lining you up.
Yeah,
your barber ain't paid taxes since '83.
Yeah, they're not reporting that, right? So anyway, they started to come out of the check. They started to make it easy so you could put the money because they needed to figure out how much you're making so they could charge you. Anyway, I'm off on a tangent.
Go ahead, so vote your conscience. All right. I'm just letting you know. All right. Cool, the movement. If you have a term policy for 30 years, okay,
yep,
totally fine. The movement, we're with you. We probably missed several of your comments. If we missed a comment that you want us to say, duplicate it. Just post it again.
Copy
We're good.
paste.
We're not scared of y'all. Who said that? I'm scared of y'all.
I don't know.
Bernie Mac? Okay, all right. If you have a term policy for 30 years,
yes,
okay, you're paying premium. You hope you don't die, probably, but if you do, your family's okay.
Yep.
And have invested in MF properly, then you should be okay.
Mutual funds.
Oh, mutual funds.
Yeah.
We're not talking about investments. If you put your dollars
What do you
in,
mean by you should be okay?